Celsius stock has been on an absolute tear. The company's strong financials continued last week when they reported earnings, but shares are up 47.1% as of the close of trading on Monday. And I think there are a number of reasons that momentum can continue. Now, this is a very expensive stock, but it was a very expensive stock when I bought shares a couple of months ago, and it will probably continue to be a very expensive stock because it's growing so quickly. Growth rates of over 100% are going to command a massive premium in the market. But there's a huge untapped market for Celsius. And so that's what I want to get into the three areas where I think the company can grow the most, not only in 2024, but really throughout the rest of the decade. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Now, the first area of growth that I think may be overlooked, but management talks about it quite a bit, is just growth in their existing locations. And that really comes from better placement in stores. Now, I live in the upper Midwest where Celsius has not been here for all that long, at least on a large scale. When they signed the Pepsi distribution deal, that's really when we started to see Celsius pop up in more locations. So I know a lot of people who have been fond of this stock for a long time, maybe coming from Florida, which is where the company was headquartered, where their business really started. But some of these other areas where you're selling into big box stores like Target or even Costco, which they've been in for a while, are relatively new. And what I've even seen personally is just the location of where Celsius is located is improving almost by the day. It used to be that Celsius would be kind of hidden on store shelves, maybe along with other energy drinks. Might be next to waters, it might be next to soft drinks, but it was not necessarily easy to find. And now you're finding Celsius in end caps, which that's really the premium placement where companies are trying to put products that they're trying to promote, because end caps is really going to be something people are just going to walk by and grab. You don't have to necessarily seek it out. So just better store placement is going to be a real big tailwind for Celsius. Again, management talks about this, but I think it can be overlooked how important that is for the company's sales, because we are now at the point where more and more people are becoming aware of what Celsius is. So if it's something that they see when they're just walking by in the store, they may go, oh, I'm going to try this. And now you potentially build a long-term relationship with that customer. So that's going to be a tailwind that I think is going to help Celsius not only in 2024, but long-term, especially if their products continue to be really strong. We started to see them gain market share, and not only distributors like Pepsi, but also retailers are going to notice that. They want to sell products that people want to buy. So they're going to move the products that are selling really well to better placements in the store. So this is something that will likely continue and be a source of momentum, even if the number of locations where Celsius is sold isn't growing all that much. But we have plenty of evidence that there is a lot of growth in the number of locations where you can find Celsius drinks. And one of the places that management has been talking about quite a bit is in food service, in restaurants like Jersey Mike's, Starbucks, the places where drinks just become an add-on product. And here again, what I think is really interesting is you're replacing a traditional soda or water as opposed to going to a market where you're replacing an energy drink. And this is where I think Celsius's positioning is potentially in a much bigger market than a competitor like Monster. Monster is an energy drink. If you aren't looking for an energy drink specifically, then you're not going to be looking for a Monster. Celsius has already talked about how its product appeals to a much wider base of users, in particular, more women. And I think it's going to appeal to a much wider base of drinkers, of people looking for beverages generally. I am somebody who now drinks a fair amount of Celsius drinks. I've drank 5-Hour Energy. I cannot stand Monster. It is just a very specific kind of energy drink. Same thing with something like a Red Bull. So Celsius is going to be much more accessible to a wider range of people. That's why I think people who are comparing Celsius to Monster are sort of missing the upside for Celsius, because this is a drink that you can actually serve in something like a Starbucks, and you're going to appeal to a number of consumers there. If you put a Monster in a drink beverage in Starbucks, I don't think that's something that's going to appeal to a lot of people. So moving into more and more of these food service locations, and this is where you're going to be able to leverage that Pepsi distribution, that's going to be another huge tailwind. And we have a ton of growth potential across North America, just getting into more and more of those food service locations. And that's a process that just takes time. It isn't something that you flip on overnight and suddenly you're in tens of thousands, if not hundreds of thousands of locations. It's something that is going to take many months, even years, to get to all of the locations that make a lot of sense. But they've had a number of small wins. Those will keep compounding, and I think we'll see Celsius in many, many more locations in the future. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Where there's even more growth potential is in international markets. And the way that Celsius reports it is what their revenue is in North America. We know that they haven't been in Canada all that long or don't have that much distribution in Canada. So I think there's a lot of opportunity to grow there. But markets like Europe, Asia, Africa, South America, these are all potentially massive growth markets. And this chart really shows how untapped these markets are. You can see that Celsius's revenue in North America, $1.26 billion in the most recent year in 2023. Revenue outside of that is only about $50 million. So we're talking about less than 5% of the company's revenue. Now here again, this is where Celsius's business model is important and their distribution partnerships are important. Pepsi is the distribution partner. They're going to be able to get Celsius drinks into a lot of other markets. And one of the reasons I think Pepsi is going to have a lot of incentive to do that is it looks like Pepsi is losing market share with a lot of its traditional drinks, not only sodas, but things like Gatorade, the kind of drinks that it's kind of been able to move to beyond sort of the sugary traditional soda drinks. And it's now gaining market share with Celsius. So this is, again, companies are going to go with the kind of product that continues to sell. And I think Pepsi is going to continue to do that. But this is where the business model is also important. Celsius does not pack most of its drink. It's not a bottler. It uses what's called co-packers. So it's able to leverage third parties to be able to increase supply and distribution, not only around the US, but all around the world, and relatively quick pace. They don't need to go in and build manufacturing plants in Europe or in Africa or in South America. They can just leverage co-packers and relationships that are existing there. And then basically they're working with those co-packers to make sure they're supplied with the kind of ingredients and the formulas that they need. They end up ultimately deciding what's going to be ordered, and then Pepsi picks it up and brings it to the store. So Celsius's position is really as a brand company and a formulation company, and then assists in the supply chain, but they're not doing most of the work. And so that's where you can leverage a lot of these partners to grow at tremendous amounts, not only in the US, but as they decide to move into more international markets, they'll use that game plan over and over again to be able to grow in all of those markets. So I think there's a lot of runway for growth for Celsius. It's a very expensive stock. And I'll just give some of the numbers here. Enterprise value to sales is 14. Price to earnings multiple is a little over 100. That seems extremely expensive. But this is one of those cases where companies that are growing at 100% per year, it's extremely hard to value a company like that. So I think right now the right thing to do is just ride the company's growth for as long as they're growing at an outstanding pace like they currently are. And there's 3 drivers of growth in the foreseeable future: better placement in their existing locations, adding more and more, not only retail, but I think food service locations are going to be a phenomenal growth area. And then tapping into those international markets that are almost untapped around the world. Those 3 growth drivers alone, I think, could make Celsius a bigger beverage business than Monster. And that is really saying something. That shows you the potential for the stock. Celsius's market cap right now, even at that high valuation, is about $18 billion. Monster has a market cap, as I'm recording, of about $61 billion. So more than 3 times bigger than Celsius. And like I said, I think Celsius's ultimate end market is much bigger than Monster's because its drink is much more accessible and desirable by a much larger number of people. What do you think about Celsius's growth potential? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.